Aloha, this is frequently asked questions about the tax-free cash growth warehouse. Answers brought to you by SCFSIC.
Does the stock market affect dividends? This is an important question and one that jumps to mind whenever the stock market experiences major fluctuations or a downturn. First, as a reminder, only mutual companies offer participating policies. That is, they participate in the profitability of the company by means of dividends. Dividends are declared at the end of each year, then paid to the participating whole life policies as dividend interest. Remember, there's a guaranteed interest that is paid to all whole life policies, and that is the minimum that is guaranteed to be paid to the cash value of the policies. The providers we use have a guaranteed minimum interest of 4%. Now again, the dividends that are declared and paid are based in the profits of the company that they experience for the year. So how are profits generated? Insurance companies are financial institutions. Most insurance companies have a securities division where they employ financial advisors or planners and help clients with investing, primarily in the stock market. Obviously, the insurance companies themselves invest in the market. So yeah, that does have some effect on their profits, but only a very small part. You see, unlike stock companies who answer to their stockholders, mutual companies may take more of a long view for their investing strategies. And they generally keep a very well-balanced and diversified portfolio of investments. I happen to have a pie chart representing the investment portfolio of our primary partner company that we use for most of our TFCGW accounts. So I'll show that to you here and quickly go over it.
Here it is. You can see that by far, the largest percentage of their portfolio is invested in public and private bonds, a total of 53.7%. Then comes mortgage loans and policy loans. Only less than 10% is invested in common and preferred stocks. Bonds are the safest investments out there. True, they don't generally return huge gains, but they are as safe as it gets where a risk is involved. And in order to be classified as an investment, there must be some risk attached.
Okay, a couple things to remember. The mutual companies we work with have histories of over 160 years. They're very knowledgeable and experienced in what works for the best interest of their owners, who are the policy owners. In fact, the companies we use most have paid dividends every year for the last 160 plus years. That means that even during the years of world wars, the Great Depression, and all the recessions in the history of the United States, our insurance partners have paid dividends. Second, term life insurance policies are the largest category of policies for any provider. Somewhere around 98% of all term policies lapse or terminate without paying out a death benefit. So, virtually all the premiums paid for term insurance is pure profit for the providers. So, the profitability of the insurance company is not dependent solely on their investment portfolio. The bottom line is, while dividends are not guaranteed, and they do fluctuate, and certainly the economy does have some effect, really, the stock market has very little, if anything at all, to do with the dividends that are paid to participating whole life accounts. Please feel free to leave a comment here And subscribe to this channel so you'll be notified of new answers to frequently asked questions and other content as we post it. And be sure to watch our free 60-minute webinar, Become Master of Your Financial World. Click on the link below.